Hello, everybody. So today I want to talk about crypto treasuries. Are they any good? And I'm specifically talking about companies that buy either Ethereum or Solana. And I see it coming in this comment section. What am I doing? Am I going way out on the risk curve? Well, that's the reason why I put this preface on there. I consider companies that stack anything else than Bitcoin to be different. It's a different business model. You're not stacking hard money if you are a SBET or a DFDV or BMNR. You're not stacking the only thermodynamically sound money on Earth, right? You're not stacking a money that has a fixed supply because of the mining that enforces the protocol and the nodes. It's really the nodes who enforce the protocol. No, you're buying something with a moving supply, and sure enough, sometimes the supply can go down, sometimes the supply can go up. But if you look at Ethereum or Solana, which are the native tokens of blockchains, right? Of blockchains that are not store of value blockchains, that are multi-application blockchains that support a lot of modern applications. You know, the whole idea, of course, of Ethereum or Solana is that an entirely new banking system, insurance system, stock market system, payment system can be built on Solana, built on Ethereum, and the currency to build on Solana or the currency to build on Ethereum is, of course, the native token from the blockchain. So this is a bet on these tokens, which are commodities linked to the very success of these blockchains. And because this is not a store of value prop, if that makes some sense, because Solana and Ethereum's main purpose is to be a blockchain that replaces fintech, essentially, Web 3.0, the next version of that. You know, what's after Robinhood? Well, it's probably something built on Solana or Ethereum. So because these blockchains are meant to replace former layers of the internet that are rooted in TradFi, they are much closer to something like a gold or a silver, is in the way I look at it, or oil or land, because the supplies are not fixed. The supplies are not enforced by the nodes. And if you look at maximum supplies for Solana, you can see infinity. If you look at maximum supply for Ethereum, you can see infinity. And sometimes there's less available, and sometimes there's more available. And of course, we know that, for example, that Ethereum a few years back used to argue, oh, we're super hard money, we're even more sound than Bitcoin. Well, in practice, you realize that really fluctuates, and in practice, the store value application is Bitcoin. ETH, Sol, it's something valuable, but it is something else, and I make no mistake about that. But nonetheless, these new assets that represent blockchains, these new assets that represent the currency to use and build on the blockchain, these new assets can be acquired by companies, right? They can be acquired by treasury companies. And so just like you have, say, for example, REITs, you have REITs that acquire land, for example. They use a lot of dilution to do that, and they can acquire land, they can acquire buildings via dilution. That's kind of a concept of a REIT. You have miners. You may remember 2 days ago, right? A copper miner went up like 50% or something like that because they had proven reserves of miners. So sometimes miners will also grow like that. They'll try to acquire more commodity, more of the underlying commodity, which they mine and get out of the ground eventually. So companies that grow via dilution are a thing. They've always been a thing. But the main difference between, say, a REIT growing via dilution to acquire more buildings and, say, a treasury company acquiring ETH, Solana, or Bitcoin, the main difference here is that the whole idea of arguing the value of real estate, arguing the value of the oil in the ground, that's debatable, that's not clearly readable, that's not clearly visible by the investor. On the other hand, arguing the value of your Solana or your Ethereum is undebatable. This is how many Solana you have, and you can look up the value of Solana, and you multiply how many Solana by Solana, and you have the price instantly. ETH is the same story, right? You say how many ETH you have, and then you can know the price instantly. So trying to assess the value of a copper miner and trying to assess how much copper they have in their mines, that's very debatable, and that's not prone to re-rating and recalculation and calculating an MNAV. However, doing that with, say, Solana, ETH, or Bitcoin, you can do that instantly. You can calculate an MNAV instantly, and then all of a sudden you create very interesting securities for options traders. You create very interesting fundraising environments where you can know instantly whether it's a good idea to fundraise or whether the fundraise is actually based in hopes and dreams of the CEO, and you know, all the hopes and dreams of the CEO is that the real estate that they want to issue shares to buy, they want to buy this piece of real estate. You got to trust the hopes and dreams of the CEO that the cost of real estate, the building they're buying, is actually worth what they're buying, right? And that's how you understand things like REITs owning commercial buildings, office buildings, retail buildings. Sometimes they get in trouble, and they sure do get in trouble indeed. So that was my preface, long-winded preface. I am a huge Bitcoin guy, always have been, well, for a long while, more than 10 years now, always will be. But let's talk now about these treasury companies, and I'll put a ticker in the video so that you can move to this part. So the first stock I want to talk about, and you know, I call it a stock, I could call it a roller coaster. It's Sharplink Gaming. I'm going to call it SBET. So SBET, they were the first to adopt Ethereum as a treasury reserve. Their stock did a 20x in no time. It went from $3 to $4 to nearly $80, and then it dumped back to 15, and now it's like at 17. So roller coaster it is on this company. Of course, hype. A lot of people buy. A lot of people think it's the greatest thing, and then they dump. They take their profits, and it takes a few weeks to actually realize the value of these companies, and for the market to realize the value of these companies. Of course, under the hood, these companies are able to monetize this MNAV. They're able to monetize their premium. And sure enough, Sharplink has been able to do that because they increased their Ethereum on the books in the past 3 weeks. They increased them by 19% in the past 3 weeks. The issuance of new share has been fully accretive for them. Imagine how accretive it was when they were issuing, say, at $30, $40. That was pretty darn accretive. Now, I will make the case that at $17, it's still accretive today. So the SBET was really the first Ethereum treasury company, so they made their own metric. Their metric that they made up is ETH concentration, which is how much ETH do you get for 1,000 shares. It's actually pretty good because it prevents you from having a bunch of zeros in your numbers. So how many ETHs do you get per 1,000 shares? 3 weeks ago, you only had 2 ETH for 1,000 share of SBET. Today, you have 2.37 ETH for 1,000 shares of SBET. So they've accreted in a matter of a month, 4 weeks, right? They've accreted, because that takes a little longer. They report 3 weeks, but I'm taking it from 4 weeks. They've accreted to 0.37 ETH. So 2.37 ETH per 1,000 shares. Fast forward early June, they only had 2 ETHs per 1,000 shares, so ETH per share is growing. Of course, what is the cost to own those 2.37 ETH? The cost is 1,000 shares times $17, and that's $17,000 gets you 2.3 ETH. And you may say, oh, it's very expensive. Well, it is, because you end up paying $7,198 for your ETH if you own it in the form of SBET shares, and the market value is $2,700, so $2,700 per ETH. That's the market value, and if you want to own that ETH via the shares, it's $7,100. So the NAV, the price to NAV, is a 2.6. And you may say, oh, well, I don't want to pay this much. It's a very, very huge premium. And then, we get into the classic debates that the shorts for these companies have, which is, oh, it should not trade at a premium. Why should it trade at a premium? It shouldn't trade at a premium. And that's fine. But when you understand the ATM math, and when you've watched my common ATM math video, and when you've actually sat down an hour and done the math, you realize that the price to NAV of a 2.62 means they are selling a dollar bill for $2.62. They're selling a dollar bill for $2.62. And how do we know that? Because the price of ETH is not based on hopes and dreams of the CEO's new business plan. The price of ETH is market traded. It's a market price. So you can know in real time whether it's accretive or not. And of course, anything above a 1 in this scenario is accretive. So let me give you a little demonstration. Assuming they are able to fundraise like they have in the past 3 weeks, assuming they keep fundraising the same way. So they increased in 3 weeks, the Ethereum on their balance sheet by 19%. Okay, it's not entirely linear. The large numbers are going to kick in, but this company is early enough for me to feel confident doing it this way. So I'm going, because remember, they raised at the lows and they raised at the top too. So this stock could move up, and the more you move, the more you're going to get a yield on your Ethereum. So extrapolating 19% increase in ETH over 3 weeks, that's a simple extrapolation of 329% increase on 52 weeks. In 52 weeks, they could more than quadruple their ETH, right? So what would that mean 1 year out? 1 year out, so next year, this date, it means that your 2.37 ETH that you have right now, next year, this date, if SBET grows at this speed, next year, this date, you're going to have 10.16 ETH. Now, let's assume the price to NAV remains the exact same, which it could go up or it could go down. If you ask me, I think it's more likely to go up right now because it's kind of like a 1 month flow. But anyways, it could also go down. Assuming it stays the same for the sake of consistency, so you do 10 ETH, right, times 2.62, that's the same ratio, times the same price of ETH. Note how I'm using the same price of ETH. I'm not using Tom Lee's prediction of $10,000 here. I'm using the same price of ETH. So assuming everything constant and assuming a 329% increase in the ETH on the balance sheet, what do you get? You get $73,000 for the cost of 1,000 shares, or on a per share basis, you get to 73. So this back of a napkin math tells me we're at 17 right now. If they're able to keep up that yield, and if they're able to keep up the MNAV throughout that entire yield raising, fundraising, they could move from $17 to $73. Or for 1,000 shares, they could move from $17,000 for 1,000 shares to $73,000 for 1,000 shares. This stock is quite interesting. I like it. 2 problems. The options chain is not developed at all. So if you want to do options, that's not a very good one. Problem number 1. Problem number 2 is a maintenance ratio is going to be 100% at pretty much any broker of this company is new-ish. So, not perfect by any means. And of course, it's ETH. And so, there's a lot of tribes in crypto. Some people dislike ETH a lot. Some people still only swear by ETH. And so it's a personal matter whether you like the asset or not at this point, because I think both ETH and Solana have a lot going for them. I think ETH won big when Robinhood shows ETH for tokenized stock. I was very surprised that Robinhood chose ETH for tokenized stock, and I'm not the only one. So institutions, TradFi financial institutions may actually build on ETH because they can find the engineers to code on ETH, and it's perhaps more of a Wild West, and it's perhaps harder to do if you do it on Solana. And of course, retail loves Solana because ETH is expensive, gas fees are expensive, but if you're a big institution and you're dealing with billions of dollars, those gas fees don't really matter much to you, and they've been trying to do their best with the gas fees and lower them. So anyways, that's for SBET. Let's talk about another stock, which let me tell you this up front about Bitmine. I'll tell you up front, A, I don't have enough data to analyze it, and B, I don't like it. What is going on? Like, what is this? This stock must have been extremely thinly traded. It moved from one digit, like $5 to $135, and now it's now back at 66. The volatility is absolutely insane. So that's way too high octane for my brain. This for my blood. This is like worse than Bitcoin. That's point number one. And then point number two, I can't make any fancy calculations on this stock because I don't understand it. So first of all, they have mining operations, but it's probably not that big. They say miner count. Which miner? You can buy a $50 miner on eBay from like 10 years ago. What miner are you talking about? How new is the miner? Right? That's point number one. Then point number two is 3,000 miners for a $433 million company. That's not a lot at all. So what is going on? Why do they have a site in Trinidad and Tobago? Why do they report the miners that are in storage or that are just out of function? I cannot understand their mining operation. They are not giving me enough information for me to judge, right? Most miners report in exahash. We don't have the exahash. So if you don't have the exahash, miner count doesn't matter. So I don't understand it. I'm not saying it's bad. I'm not saying it's good. Maybe it's like the latest 13 joule next generation Bitmine. Maybe it's that. But there's not enough information at all to assess this mining operation. And the fact that they report miner count kind of worries me a little bit. Bitmine, they bought Bitcoin. Okay, so what's going on? I thought Bitmine was supposed to be an Ethereum company, and they bought Bitcoin. So, okay, so that's not gonna be a clear story. That's gonna be a harder story for Wall Street to understand. Which is my conclusion on this one, by the way. It's not a yes, it's not a no. It's a not for me. I don't like it. But I should have prefaced, I don't like it for me. Not for me. But anyways, what's going on? So they own Bitcoin. So they bought Bitcoin. They mined Bitcoin. Then they did a private placement. Okay, that's great. $250 million private placement. But they, quote unquote, printed those shares at a price of $4.50. So what is going on? $4.50. So and of course after that announcement, the stock popped, obviously, and so that's really good if you were able to buy it at $4.50. Good for you if you were priced of a part of a private placement. But now it's trading at 66. So for the new buyer, this is no good in my view, right? That's just what I think. And then the two good things. There's two good things about this stock, and I think that's why the stock shot up. Of course, Tom Lee is behind the stock. Tom Lee is going to be the chairman of the company. So I attribute a lot of that spike to Tom Lee. Tom Lee is a famous crypto guy, honorable guy, pro-Bitcoin. I love Tom Lee. Lots of people love Tom Lee, right? He's had a few great calls. He's had bold calls. He's been on CNBC every other morning, pounding the table on Bitcoin and helping the cause. And so Tom Lee is a great guy. So I attribute a lot of that spike due to Tom Lee. Now, those $2 billion, and this was issued yesterday, by the way, and the prospectus, I didn't do a screenshot because it's not very user friendly. But anyways, if you look at the prospectus, they're going to issue $2 billion of common stock. Well, that is good because even though I can't really calculate how much ETH and Bitcoin they have right now, I can tell you it's probably way less than 433 million. That is my take. It's probably way less than that. And so I don't know what their price to NAV is, but depending on how much that ETH they bought, depending on how much we end up with number of shares with diluted shares, you could have a double-digit MNAV, and if you do, then by all means, diluting $2 billion is a really, really good idea. So is this a case of you're harvesting the Tom Lee premium? This is Tom Lee, chair of the company. Are you harvesting his premium by doing a $2 billion ATM and then buying Ethereum with it? And if you add to that the fact that Ethereum could go through the roof, I guess some people find it interesting. To me, I don't like it for me. There's not enough information for me. I think it's confusing. Are they a miner? Are they a Bitcoin holder? Or are they an Ethereum holder? So I'm staying away from this one, but that's just me. And the last roller coaster I want to talk about today is DeFi Development Corp. Now, DeFi Development Corp is the one that I like the most out of all of them. Frankly, it'd be a tie between DFDV and SBET. They would be at a tie, but because SBET doesn't have a good options chain, and because SBET doesn't have margin, I prefer DFDV, which, I don't think they have margin at DFDV, but the options chain is great. December 2026, 527, you can buy leaps on that, right? You can buy calls on that 500 days out to make that more of an asymmetric bet. And that's definitely the way I'm looking at this company. And I also like that 2 days ago, they bought more SOL. They now have 690,420 SOL. This is, of course, a social media ready number. Why would they pick that number? Because they want to be trending on social media, because it's all about this modern world of investment. So 690,420. Right, as what is it? Solving the money problem would say nice. That's a nice number. But if you multiply that number by 157, you realize you have 108 million bucks. 108 million bucks worth of Solana. The company is trading at 333 million market cap. So your MNAV is a 3.06. Dilution is accretive at this level because you're selling $1 for $3.06. So dilution is accretive at this level. And how did they acquire, right, an extra 47,000 SOL? How did they acquire that? Well, they acquired it thanks to the ELOC that they, highlighted. Was it 2 weeks ago now or a few weeks ago? They did an ELOC and not an ATM because of paperwork issues. They didn't file the proper thing in time, so they had to do a roundabout way to do it. But anyways, it's essentially the same as an ATM, 5 billion. So what DFDV is doing is they're issuing shares left and right to harvest that premium. And so how it works is you issue shares, you take the premium down a little bit, you wait a day, the premium goes back up, you issue more shares, take the premium down, you wait a day, the premium comes back up. And of course, a stock like DFDV has a lot of opportunity to see its stock go back up because the volatility is 2x the volatility of Bitcoin. You may also remember my video where I compared a stock like DFDV with the 2x SOL futures ETF and even the regular SOL staking ETF. And what did I say? I said I like DFDV better because the fees on the SOL ETFs, I don't understand what kind of a money grab this is on the money on the SOL ETFs. But those fees were pretty darn insane. And over the long run, paying a premium. And this is the last thing I'll conclude with. Let's remember that over the long run, paying a premium for either DFDV or a Ethereum company, well, there's a built-in premium that ought to be added because of the staking and because of the compounding of the staking, right? Staking pays about 7%. Take $1,000 at 7%, compounding over a 10-year period. Well, you have a value that's much, much, much higher, right? Is it roughly? Was it 4x, 3x higher or something? I don't have it in the top of my mind, but it's multiple times higher, multiple times higher. And so the market is pulling forward some of that yield that ought to be earned via staking in the future. And so that's why perhaps the treasury companies that own crypto with native yield perhaps should natively trade at a price to NAV a little higher because you're pulling forward some of that built-in yield. Anyways, Solana, I love to see DFDV buying more and more Solana. They are this is perhaps the beginning of a company that begins to be relentless. Right there, that period between late May and very early July, late June. That was the period of the ELOC trying to get that approved. Now they got this approved. I want to see relentlessness in the acquisition of Sol. I want to see them buy every week or every 3 days, even better. Or, maybe not every day, because you shouldn't do the ATM on bearish days, but often, right? I want to see a lot of dots to kind of judge the relentless of this management team. So I like DFDV. I like it. But this is not financial advice. This is not investment advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.